international trade funding.
International trade funding is a complicated process including numerous elements from business policies and marketing strategies to risk exchange and terms and circumstances of generally borrowing. The major goal of a successful export financing program should be to finance as many as feasible with the maximum simplicity and minimum risk management.
Hi, Assalamualaikum. I'm Hani. Today I will explain about background of the FIN323, which is this company is a global Malaysian corporation engaged in the main growing industry. FIN323 company also is a business department was established in 1910 and aims to bring beneficial advantages in its economy, environment and community. FIN323 plays a significant part in the Malay economy as a diversified and worldwide firm with more than 100,000 employees in 23 countries.
Trade financing facility is a financial instrument for commercial transaction. The financial trade enables enterprise to import and export vast volumes and convenience of their products and services. This means the financial instruments employed by the company to enable commerce and external commerce. Trade finance involves not only all loan facilities but also LC, letter of credit insurance, export factoring, losers, export credit and insurance.
Next, we move to financing facilities. The first financing facilities is banker acceptance. Banker acceptance is a customer letter of exchange received by the bank in support of appropriate documentations to prove movement of the goods between trading partners. And also, banker acceptance have advantages and disadvantages. First advantages of banker acceptance is a smaller financial risk. Second is a greater possibility. Third is very low cost. Lastly, advantage is no payment in advance. For disadvantages of banker acceptance is first is financial analysis. You will not be agreed by the bank you choose till you have been continuously checked. Second is suitability. When offering this offer, banks tends to be quite picky. Last disadvantages is collaterals. Many banks want their own security to be strained by collateral. You may not pay enough charges and your moving asset will be desired by your bank. Now we move to terms and conditions of banker acceptance. First is account opening. Second is deposit and withdrawals. Third is a joint account, where the account has been opened and keep one or more common names. In the case of death of one account holder, the customer agrees that without prejudicial effects on the bank's right, the banks will maintain money in the account on the order of the overall survivor, irrespective of a lawful representative claim. And next is fourth is a statement, which is the for declaration based account. Fifth is indemnity.
A shipping guarantee is a compensation supplied by the recipient to whom the bank must jointly compensate the carrier of goods so that without the production of the required landing documents, that recipient so designated can receive a shipment. Bank deals with documents and not tangible objects in international trade. Shipping guarantees are legal financial obligations or companies given by banks on behalf of clients for the purpose of facilitating their commercial transaction in the interest of third parties. There are three advantages of shipping guarantee, which is first is capital reduction tied up. Second is fulfill the opportunities in the market. Third is the financial cost is reduced. Term and conditions of shipping guarantee. First is bill of lading. Second is agreements to terms. Third is printed signature. Fourth is customer warranties. And lastly is necessary documentation.
Now, I will explain the last facility, which is export credit financing. Export credit financing is a short-term, pre-shipment and post-shipment financing plan offered by Exim Bank through a designated commercial bank to direct or indirect exporter. Next, the advantage of export credit financing for exporter and importer. Firstly is gain a competitive advantage by providing finance to prospective customer. Second is receive paid in cash upon shipment or commission, and the last but not least is there is no need for administrative use. Now I move on to the advantage that the importer can get when use the exporter credit financing. First, the importer can use long-term financing to match predicted income with expenditure, resulting in more efficient cash flow. Other than that, they can get financing which can be restricted that is less expensive than local funding. And lastly, saving on finance can be obtained by importer by using private insurance programs which can make financings available at competitive rates. The term and condition of export credit financing. First, we authorize the bank to debit any of our bank accounts for payment of any money owed to the bank under and in connection with the SCR loan. Second, any dispute between us and the bank originating from the export credit financing shall be regulated and construed in line with Malaysian law. Third, for any actions, claims, demand, fee, expenses, including full compensation legal fees, liability, and losses incurred by the bank in connection with the ECR loan, now or in the future, we shall indemnify and hold the bank irrefutable. Fourth, where authorization has been granted to release document in exchange for payment in local currency, we will be held liable for the entire amount of bills remitted and will repay any deficit to the bank. Lastly, all export orders, letter of credit, draft, or document acquired, discounted, or negotiated under the Exim Bank export credit financing facility by or through the banks, or against which any monies should be advanced by the bank and should be subject to full recourse to us.
I will explain about MBank. MBank Group is a leading financial service group in Malaysia and has more than 40 years of expertise in supporting Malaysian economic development. They have more than 3 million customers and employ 9,000 more people. In 1918, the group was listed on the Malaysian Main Exchange. The group is the 6th asset-based signal banking group in Malaysia, with a market capitalization of around 9,000 billion ringgit and asset of 169.2 billion ringgit as at 31 March 2020. 3 financing facilities in MBank. Number 1, shipping guarantee. Number 2, bankers acceptance. Number 3, export credit financing. Advantage of shipping guarantee. Shipping guarantee will ensure the trader gets the goods without submitting the original transport document. Shipping guarantee can provide protection by minimizing damage to perishable goods due to delay. Shipping guarantee can save your cost by avoiding high port demurrage charge. Shipping guarantee will increase the liquidity of payment for goods only required after submission of document by the bank. Advantage of bankers acceptance. The seller will not face significant financial risk. This is because when a seller is hesitant to sell something to a buyer who does not yet have a solid reputation, the reputation of the bank is very important. In this case, the bank ensures the seller that everything will be paid for and that the buyer can be trusted. This is a reputation problem, as buyers backed by well-known bank are more likely. The well-known bank can attract more sellers, and business with bank guarantee can attract large investors. The cost given by bankers acceptance is low. However, interest rates are usually very low, and the chance of you getting an exchange are well worth in spending won't affect your profit much, but you will have a new partner, which is bank. No one will ask for an advance payment if you are backed by a bank. For all that, you will be too dependent. On the other hand, before you pay, you will have the opportunity to spend the fund as needed. Advantage of export credit refinancing. Export credit refinancing provides short-term credit facilities provided by Exim Bank, with financing rate determined by Exim Bank from time to time through the commercial bank after adding margin to Malaysia directly and indirectly exported for the purpose of promoting the export of manufactured goods, trade in goods, and agriculture products. Export credit refinancing consists of 2 facilities, namely pre-shipment facility. The pre-shipment facility is to provide for exporter directly or indirectly to finance their purchase or import before delivering the goods to their customer. Post-delivery facility. The posting facility is available to direct exporters to finance their exporters. My evaluation for the three financial facilities that Samdabi can choose from the shipping guarantee. This is because the shipping guarantee has many benefits that can be optioned by the Samdabi company. Namely, the shipping guarantee will ensure that the trader gets the good without submitting the original transport document. In addition, shipping guarantee can provide protection by minimizing damage to preservable goodwill to delay, and shipping guarantee can save costs by avoiding high port demurrage charge. This is appropriate with some Samdabi company. Shipping guarantee will also increase the liquidity of payment for goods that are only required after the submission of document by the bank. Other than that, Samdabi will also get a lot of benefit when choosing a shipping guarantee. One of them is the late return of shipping guarantee, that is after 3 months from the date of issue shipping guarantee will receive 0.5% per annum on the invoice value, and the next 1% per annum until the date of shipping guarantee returns.
Okay, next I will explain financial facility in Bank Islam. First, let me talk about the company profile. Bank Islam is the first Islamic bank in Malaysia and has the country's largest network of dedicated Islamic banking channel with more than 144 branches throughout the country. Islamic banking is to provide banking and financial solutions that are based on the principle of Sharia, such as focus on balancing individual and social needs, as well as commercial operation that promote justice and social and environment responsibility. Okay, next I will explain about the advantage of shipping guarantee. Firstly is total amount guarantee. Up to 100% of the amount claimed by the company shipping. Secondly, buyer or importer can take delivery of goods immediately. And thirdly, buyer or importer will not have to any incur demurrage and warehousing charge. And lastly, shipping guarantees enable you to sell the good without any delay. Okay, for the advantage of bank guarantee is widely accepted and can be leveraged to enhance your reputation. Second, can unlock your capital from required deposit or payment in advance. Lastly, total amount guaranteed, which is up to 100% of the contract value. And the last one, advantage of export credit refinancing, which is the lowest cost of financing as it's funded by Exim Bank. Second, for post-shipment ECR, customer can obtain immediate funds upon representing export document after shipment. Third, interest rate is based on Exim Bank's ECR funding rate. Financing is categorized under pre-shipment and post-shipment. And the fourth is most financing is structured to match the foreign currency receivable of our customer. And lastly, immediate fund upon presentation of export document. And the last explanation is about evaluation. My evaluation for three financial facility that Samdabi can choose is shipping guarantee. It is because from shipping guarantee has many benefits for Samdabi company to use for their orders. Also, with shipping guarantee, the trader can ensure that they can get their goods without any the original transport documents. However, the shipping guarantee can enable Samdabi to sell the good without any delay and also can save costs without any demurrage and warehousing charge. Next, the buyer or importers can take a delivery of goods immediately. Lastly, the reason why Samdabi should choose the shipping guarantee because in shipping guarantee has bank effective commission rate, which is 0.1% flat on the amount of in the invoice with minimum of Rm100 and 0.5% per annum on the amount of the invoice if the guarantee is not returned within 3 months for the date of issue with minimum Rm50 ringgit.